What I'm about to show you is the only ICT strategy you'll ever need. My name's Colin, and for the last 6 years, I've been working on something I call the Trinity model. It's helped countless students get payouts, and it's what's gotten me personally funded $650K, as well as multiple payouts. This model is super simple, and it works almost every single day. So without further ado, let me show you how it works. Starting with our stat map here, if I go out back to around 8 o'clock, this is where I start to look at the market around 8:30-ish. And as you can see, we haven't tagged either our bearish manipulation or our bullish manipulation levels. So what I'm going to do is simply wait for it to tag one. And if we come over here on our NQ chart, we'll see that market open was right around here. This is the start of our 920 macro. And here's our bearish manipulation level. Okay. So if we play this through, market opens, we tag that level, and because we are at all-time highs, we don't really have any fair value gaps to use to take us lower. So normally what I would look for is some sort of fair value gap in here, either right above or right on our manipulation to take us lower. But since we don't have that, we have to look at our 15-minute, or 5-minute rather. So what we're looking for is a 15-minute inversion gap, okay? So essentially, we have a bullish 15-minute gap here, and we used it to push us higher to tag our bearish manipulation level. What I'm looking for is for us to trade back through this 15-minute gap, for it to become an inversion gap, and for us to use it to tag back in and take the trade lower. So let's see what happened. Let's go on our 1 minute. As you can see, we close below this 15-minute gap right here, so it becomes an inversion. Now, I am simply looking for a retracement back into here and then the trade out. We wait for that, and we get that right about here. We come back up, we respect consequent encroachment of that gap, we trade back through, and we form an inversion gap right here on our 1 minute chart. We have SMT between this high and this high, where we have a higher high and a lower high on NQ, and on ES, we have this lower high and higher high. And again, our higher time frame gap was this 15-minute gap right here. Okay, so this was the first trade that we took. Stop loss goes above the high, and our standard deviation goes from this low to this high, because that's the leg that caused this fair value gap. Our break even is at -1, and I'm going to be all out at previous day's low because we are up towards previous day's high right now. So let's trade this. We come back up into our inversion gap, don't quite hit our break even yet. And then we do hit our break even right here. So I went break even on this trade, and my fill was closer to right here. So we're looking at like right here for the fill. And so once I set my break even, I did get tagged out. But as soon as I got tagged out, if you'll notice, if I draw this inversion gap out, this is where you have to kind of like really pay attention to the standard deviations. The point of 1 to 1.5 is a retracement zone, right? So in here, we're allowed to see price come back up and then trade back lower, okay? Which is kind of what we're getting here, right? We tag into this zone, trade up, and trade back lower. Only time I don't want to see price trade back up is out of 2 to 2.5, because that's our reversal zone. So when we see this and I get break evened, but we don't come back to that inversion gap that caused the trade in the first place, that's telling me that I'm going to have an opportunity to re-enter lower. So here's our break even. Let's get these out of the way. And we have a bullish fair value gap right here. And even though this is outside of a macro, the macro that we used for this inversion gap is still valid because -1 again got tagged and we didn't come back up to this gap. So if we trade that back through, this got inversed. Here's our entry, here's our stop. Now we can take a standard deviation of this leg, because this is the swing that caused this inversion gap. Break even is right here at -1. And again, I'm going to target previous day's low. Okay, so let's split this through. -1 gets tagged, break even. That's also around my 2R, so I took half off. I'm going to take another half off at -2. Which gets tagged right here. Now that we're at -2, we're going to trail our stops to this high because that's 2 highs above us. We have 1 and 2. Continue lower. Now we've hit -3, so I'm going to trail my stop again to this high right here because that's 1 and 2. I had a target at our bullish manipulation because I always want to take a trim at our opposing stat map levels. And then right here, we formed a swing point just above our previous day's low. And if you'll notice, if I go to my daily chart right here, at that point, NQ had not taken this low, but ES had. So I went ahead and took another trim when we started to eject here, right here. So I took a trim here. And at this point, we had hit -4, so my trailing stop was right here because we have 1, 2 highs. If we get rid of this drawing real quick, play this through, As you can see, I got stopped on the rest of my contracts, leaving us with about a 7R, 6.98. Makes sense? So we got a break even over here, over here, and then immediately re-entered and took the trade all the way down to bullish manipulation. Any questions? Correct, because I don't want to see it come back to my entry after -1. And since technically the entry was lower, if I had entered like spot on right here, we wouldn't have gotten break evened. But since my entry was like right here, we got break evened, and I re-entered off another confirmation of another inversion gap out of this area. If you guys want lifetime one-on-one mentorship with me, all you have to do is click the link in the description and book an interview with my team. Thank you guys for watching. If you enjoyed, please make sure to like and subscribe, and leave a comment for any other videos you want to see in the future. Thanks, and I'll see you guys next time. Peace.